welcome back to the channel. Today we're going to be covering a very important investing topic, and that is what is the pros and cons each, and ultimately what's better in each situation between index funds and ETFs. Before we start, I just want to say that for both ETFs and index funds, there are different sectors of stocks for each one. For example, there are tech and energy index funds, and the same thing with ETFs. The advantage in investing in those versus regular individual stocks is that if a company truly bankrupts, when you invest in an individual company, you lose all your money. Meanwhile, under an ETF or index fund investment, you're still into the game because you're investing typically in multiple stocks and companies under each sector. With that out of the way, let's get fully into it. So firstly, what is each one of them? Let's start off with ETFs. Exchange-traded funds are investment funds that hold a collection of assets such as stocks, bonds, commodities, or a combination of these assets. They trade on stock exchanges just like individual stocks and can be bought and sold throughout the trading day. ETFs provide investors with a range of diversified assets, which helps to spread the risk and provide stability to the portfolio. ETFs are managed by an investment property which creates and manages the fund. The company hires portfolio managers to oversee the assets, but unlike actively managed funds, ETFs are managed passively. This means they aim to track the performance of a specific market index, such as S&P 500 or the Nasdaq, rather than attempting to beat it. Index funds, on the other hand, are funds that aim to track the performance of a specific financial market index, such as S&P 500 or the Nasdaq. Just like ETFs, index funds are passively managed and provide exposure to a diverse amount of assets. Index funds are created and managed by an investment company which holds a portfolio of securities that match the holdings of the target index. For example, if investors wanted to invest in the S&P 500, they could purchase shares in an index fund that holds the same stocks in the same proportions, such as the S&P 500. As seen, both ETFs and index funds provide investors with low-cost, passive investment options that offer exposure to a diverse range of assets. The main difference between the two is the way they're structured and traded. While ETFs trade on stock exchanges, index funds are purchased directly from the investment company. With this, guys, I just want to take a quick second and ask you, if you're enjoying the video, like it and subscribe to the channel. Also hit notification bell so you get notified every single time I upload. There are no ads or stuff I'm promoting as of right now. So once again, nothing else, guys, just subscribe to the channel. Now that you understand what they are, let's look at the pros and cons of each. Let's start off with the ETFs. They're best suited for investors that are seeking more control over their investment and are comfortable with higher level of trading activity. ETFs can be used for a variety of investment strategies, including short-term trading, asset allocation, as well as sector rotation. They're also a good choice for investors looking for specialized exposure to specific sectors. ETFs typically have lower turnover rates, which results in lower capital gain tax liabilities for investors. A con for ETFs is that the ones that track a less popular niche may have low trading volumes, which can result in difficulties in selling shares when needed. On the other hand, index funds are invested for long-term buy and hold investors who are seeking a passive investment strategy and are comfortable with lower levels of trading activity. They're also a good choice for those looking for a low-cost, broad-based exposure to the market and who are not concerned with outperforming the market. Index funds mainly target to match the market, not beat it, which does limit its potential growth for higher returns. In summary, both index funds and ETFs offer cost-effective and diversified investment options, with ETFs offering greater flexibility and index funds offering consistent performance and lower fees. It's important to keep in mind there is no one-size-fits-all answer for this question, and the best investment choice will depend on the individual's investment goals and risk tolerance. With that, guys, the video's over. Let me know down below what you think is a better choice for you, whether you prefer index funds or ETFs based on the information heard. I'd love to hear your guys' perspective on this. Let me know other similar financial content you'd like me to do next. Make sure to subscribe to the channel. There's a lot more content coming. And as always, stay diversified.